Welcome back. Welcome back, everybody. Welcome back. It's been a while since I make one of these videos, to be honest. And right now, I'm gonna be just moving on to chapter 10 of the book, the accounting book, the same accounting book I've been using for my previous assignments as well. We're gonna talk about two questions, an E questions and a P question, if you know what I mean. So yeah, the main topic of this discussion in this video is about calculating preferred stock, and common stocks and preferred stock. Basically, you have stocks that are for the common and for the preferred ones. They have their own differences, advantages, disadvantages, and so on and so forth. There's also a thing about the EPS, and we're gonna try to calculate that as well. So I'm just going to go into the first question. So the first question asks us to determine the cost of investment. Okay. So I've put down all the numbers here, and what I want you to understand is that all of these are considered as equity. But in the case of preferred stocks, you don't want to consider the preferred stocks as the equity because those are for the preferred people. Since the parent also acquires this through common stocks and the preferred stocks, we want to exclude the preferred stocks. So that's what I essentially did here. I put the total equity of 8,000, just like the table. I deducted by the preferred stocks, and the way I do this is I just extract this number, 2,000, as it's mentioned in the table, and deduct 2,000 from the 8,000. I get 6,000 here. And since the parent only owns 80%, I took 80% from 6,000. I get this number, 4.8. So that's for the first number. The second number, we need to calculate their net income, the parent's net income, and NCI. Okay, so the calculations are similar to how we usually calculate net income and NCI, but then there's a little bit of differences because we have the preferred dividends, preferred stocks, right? The preferred people. And so I have here my net income of 1 million, and I took this from this information as well, which is provided in the question. And then I subtracted by the preferred dividend. So preferred dividend essentially means the dividend that you it means the dividend that is for the preferred people, and that should be distributed first before anything. Like that's kind of the main concept of this. They get the dividend first. So what I did is that I took the dividend of this and then I multiplied by 12%. I got this from the information on the case. So as you can see here, this is the information, 12% cumulative preferred stock. So I just multiplied that and I subtract that from the net income. And so this is kind of the income after the allocation of preferred dividends. And then you just take the parent's portion of it. You have that, right? As for the NCI, um, this is how I calculate the NCI. So I added the preferred dividend here with the NCI, since in this case NCI is kind of the preferred stocks from what we're looking at, because parent owns the common stocks, right? So the preferred stocks should belong to parties other than the parent, so the NCI. And so I add that with the preferred dividend here as well. So that's the portion for the NCI. And on number C, we are told to calculate the underlying book value. So what underlying book value essentially means is it's the book value. So these are the equity. These are equities, right? The underlying book value in this context is basically this equity, but without the preferred stock when it is called. So in the case they mentioned that it's callable at $105 per share. So we want to multiply that to the initial number. So this is what I did here. Multiply it by 105 and I get 2,100. And so what I did here is I essentially sum all of this and deduct it by this because we don't want to include this preferred stock thing here. And this is kind of the book value, and then we just basically we get like the portion again 80%. We own 80%, so we want to acknowledge only 80% of it. And so yeah, that's kind of what um, how to like deal with preferred stocks. To sum it up, basically the calculations here is very similar to the normal, and I say this normal, but it's like the normal consolidation techniques that we have previously learned. But the main differences here is that since there is a thing with the since sorry, but since you have preferred dividends, preferred shareholders, which they are more prioritized, so they get dividends paid first, they get everything first basically because they're the preferred ones, higher priority. So you have to make adjustments to that. So you make adjustments and in a way that you don't want to include that to your like calculations of, let's say, equity, let's say income or NCI even. Oh no, not for NCI, because NCI in this case they own the preferred stocks. But you get what I mean. Okay, now the second question, we're going to talk about EPS. So EPS is earning per share, and the idea of earning per share is that a company has income, a company has their own shareholders as well, and the stocks, right? And the idea of EPS here is that it's the amount of earnings, I guess, the income that each of these stockholders would get from the income. So from like a mathematical standpoint, that will be the income divided by the stocks, the amount of stocks. It's like that. There's like a formula for it, but that's the basic idea of EPS. And so we are told to calculate the EPS for the parent and subsidiary, POP and SUN. And this is how I calculate it. I'm going to start with the SUN, the subsidiary, and then I'll kind of go up to the POP because some of the calculations on the POP's EPS uses information on the SUN's EPS. So yes, I'll begin from the SUN first. So we begin with the numerator, calculating the numerator. Numerator is the thing on the top. If you know like a formula with like a dividing formula, numerator is on the top, denominator is on the bottom. The numerator, we're gonna get the total income, right, of 55, and then we're gonna deduct it by this, the 1,000 share of 10% at like $100 par value, and that is provided in the question in the problems, and I basically just calculate them by multiplying all of them. So I multiply, here you can see 1,000, 100, and 0.1, 10%. So that will be like 10,000, and I use that to deduct from the 55. So that's the numerator, the basic EPS. And as for the denominator, it's 10,000 because that's like the amount of stocks there is. See there. And yeah, just divide it and you get the numbers. And as for the diluted, it's a little bit on the complex side, in which first you have the common stocks, and then you have the basically the idea of diluted EPS is that it's the EPS in assumption that you convert all of your convertible shares or options or others into like the shares as well. So in this context, I have 10,000 as the initial amount, and then we have converted preferred stocks of 3,000. All of these are provided in the case. So like where is it? The 3,000, this one, 3,000 shares. So they have like these shares and they are convertible into 3,000 shares. So assume it's converted, we're gonna add 3,000. And there's also an option which is the amount is like 30,000 because it's like 2,000 shares for $15. So multiply, you get this. But then the question also says that to calculate the EPS, if the market price is $30 per share. So using the assumption, I divide this 30,000 with 30 because it's like the company is like buying back the shares at like 30 at like $30 market price, because again we're using the assumption that the shares are like converted. And so the net converted share here is initially we have 2,000, but then we have to deduct it by 1,000, and so it'll be like 1,000. And so we make adjustments on the initial amount of common stocks. So 10K, we deducted by 4,000 in total. We have 3,000 for the preferred ones, which we converted, and we have another one from the options, which the net convert shares is around 1,000. So we adjust to that and we will get 4,000 stocks. This is the total stocks that will be used for the calculations, thus the denominator. As for the numerator itself, it's still the same. It's like uh, it's 55K here, right? So I just use that divided by this 14 and I get this 3.93. Now moving on to the parent side, from POP, to calculate the basic EPS is basically their income and their common stock. So this is very basic. Again, you have this, then you have this, then you divide it, you get that 7.5. As for the diluted, this is where the information from the subsidiary is important because we're going to make adjustments. So at first we have this, right? This is their income, and we want to adjust that income. We need to adjust, not that we need to adjust that income. With what exactly? With first we want to deduct the preferred stocks, but then we kind of want to add it back. So we deduct it with the preferred stocks, which we have calculated before. So it's 55 minus 10, that's like 45, right? And we multiply that by 80% since that's the portion that we own, the parents own. And that's like the amount of preferred stock that we should deduct. And then after that, we need to add back because this is like diluted. And so I added back the using the calculation where I calculate. Let me find the numbers real quick. I basically calculate using the EPS of the son of the subsidiary. So you have 3.93 here, and I make calculations with that. Let's see the formula. It is what I did. So multiply that with the 8,000, the stocks, right? And so you do that, and then you make adjustments to the numerator. And you notice how the amount of the things that we return, like we put back, is like different from the amount that we deduct initially. And it's the idea here is because this is also influenced by the EPS of the subsidiary. It's influenced by that number. It's one of the determinants, this amount, which is the diluted ones. And so yeah, in the end we got 145. Denominator, we're just gonna set it to 20 because that's the amount of common stocks there is, and then divide it. And you should get 7.27. Okay, so that's the final calculations, and that kind of marks the end of the questions, the video. I don't know, this probably will be my last video for a while, and yeah, let me know again. Always let me know if I have done anything wrong in this assignment or my previous assignments. I really hope to receive some feedback. I don't know if I'm going to be getting any, but either it's from my grader or my lecturer. But I really want to know whether I'm doing this the correct way or whether my answers are correct or not. Just let me know about this, and I'll be seeing you in my next video if there's any. Thank you.